Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we are diving into the world of Vireo Growth Inc. Don't let the name fool you, this isn't your average gardening company. We are going to look at their latest financial health report and see if their growth is as green as their name suggests, or if there are some hidden weeds we need to pull out. This is a Form 8K report, which is basically a company's way of saying, hey, something important happened and we need to tell the SEC about it right away. Think of it as a corporate emergency broadcast system. In this case, the important thing is their financial results for the year that just ended. This report is dated March 4, 2025, so we are getting a pretty up-to-date snapshot of what is going on. Vireo Growth Inc. is based out of Minneapolis, Minnesota. Their main phone line shares the 612 area code. The main part we care about is item 2.02, which will focus on the financial results of the company. They put out a press release on March 4, 2025, announcing their financial results for the year ended December 31, 2024. We are going to take a look at that press release to see what it says. The report mentions that this information is furnished, not filed. What that means is that they are giving this information but not responsible for it as much as if it was filed. This has legal implications. Alright, diving into the actual press release, the headline announces their results for both the fourth quarter, which covers the last 3 months of 2024, and the full year. It also mentions a conference call and webcast, which is where company leaders will talk about the results and answer questions. We won't be tuning into that, but we can learn a lot from the press release. Here is a key figure, revenue, which is the total amount of money the company brought in from sales, came in at $48.1 million. That is for the whole year 2024. That's compared to $40.3 million the previous year, 2023. That means they increased their revenue by almost 20%. That is a very healthy rate of growth. The report highlights gross profit margin. What this means is that for every dollar of revenue, about 52 cents was left over after paying for the cost of goods or services they sold. That is up from 44 cents the year before. So they are not just making more money, they are making money more efficiently. Now for the part no company likes to talk about, losses. Vireo Growth lost $48 million in 2024 compared to $13.5 million in 2023. That is a big jump in losses. This means that even though they are selling more products and making more profit, the company overall is losing more money each year. They also mention adjusted EBITDA, which is a measure of profitability that takes out some accounting factors to give a clearer picture. Their adjusted EBITDA was $4.6 million, down from $5.2 million in the previous year. So even by this measure, their profitability is slightly down. The company is trying to highlight the positive by focusing on EBITDA and not mentioning the loss in their main statements. The CEO is quoted as saying that their improved financial results have positioned Vireo for growth in 2025. But as we saw from the numbers, not everything is improved. They are hoping for better numbers in 2025. The press release provides some information of their operations. Vireo says they currently run around 50 stores. They are selling across 7 states. They announced the sale of their operations in Pennsylvania for $30 million in cash. This sale might explain the increased losses we saw earlier. When a company sells its operations in an area, there will be accounting losses. The report states that the company strengthened their balance sheet through refinancing their debt. This means that they were able to take out their existing debt and renegotiate the terms, hopefully at a lower interest rate. This shows that they are actively trying to manage their debt. The company held roughly $30 million in cash and cash equivalents at the end of 2024. This is very important, as cash is king. You can be making a great profit, but if you don't have enough cash, you will go bankrupt. The report contains a reconciliation of EBITDA to net loss. Basically, because EBITDA doesn't follow standard accounting rules, they are showing how they get to the real number, net loss. As we saw, the net loss is not good at all. Here is the loss again. The net loss attributable to Vireo was $48 million for 2024. This confirms how big the jump in losses was, as we saw earlier. Looking forward, they announced that in January 2025, they sold all of their equity interest in their subsidiary in Maryland. So they are continuing to restructure and exit states. So what does all this mean for Vireo growth? On the one hand, revenue is up and gross profit margin is up. Those are definitely positive signs. It shows that they are selling more and selling more efficiently. They are also managing their debt by refinancing it and selling assets to increase their cash. On the other hand, their losses are way up. They are selling their operations in some states, which could mean they are struggling in those markets. Overall, Vireo growth seems to be in a state of transition. They are growing revenue, but they are also losing money. Their future really depends on whether they can control their costs and become profitable in the markets where they choose to operate. This sector is also very competitive. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives. Let me know which company you want me to decode next.